General rules for minimizing investment risk in the cryptocurrency market. Risk assessment is critical for individuals interested in starting a business. This would help determine which management strategies would be most effective in achieving stability and success. Additionally, it provides some assurance and confidence that the business will run smoothly. The same is true for cryptocurrency investments, as this sector also carries a higher level of risk and unpredictability. There is no one-size-fits-all formula for achieving financial objectives in an instant. Typically, trading transactions require patience and good fortune to succeed. Given that risks cannot be completely eliminated, the best course of action would be to manage them effectively. This is especially critical for new cryptocurrency traders to avoid losing assets due to a lack of knowledge or a poor strategy. The best place to begin is by becoming familiar with the market's ups and downs, which typically entails spending time studying and analyzing all relevant factors. The planning and execution stages are ideal times to apply some of the most beneficial business principles. Consider the following general guidelines for minimizing and managing your crypto investment risks. The cryptocurrency industry is extremely profitable, but also extremely risky. Cryptocurrencies have attracted millions of investors worldwide and amassed a multi-billion-dollar market cap as a result of their profitability. Additionally, there are traders who became millionaires in less than 10 years. This success, however, is elusive for many hopefuls because the outcome is highly dependent on algorithmic functions and some clever strategies. Growing these digital assets may take time, and the process is not without risk. The cryptocurrency industry is highly volatile and speculative, which means that price movement is frequently unpredictable. According to experts, crypto investment decisions must be based on research in order to accurately assess probabilities. To succeed in this venture, investors must take a long-term view and refrain from expecting immediate results. The likelihood of achieving the desired outcomes would be largely determined by market supply and demand. Beginning with a small capital investment is encouraged, as most investors find the initial stages to be a trial and error stage. According to some analysts, this type of investment carries a higher risk but also a higher reward. Are you prepared to take on the risks associated with cryptocurrency investments? The first rule is to understand the risks associated with your investment. Then determine whether you can manage them or leverage them to your advantage. The unpredictability of price movement, the possibility of malicious attacks, and finding the best deals to trade your digital assets are just a few of the risks you must contend with. If you can figure out the best way to protect your interests, none of this will matter. According to a financial expert, education about the investment venture is critical. However, everything will work out better for you if you choose a reputable trading platform. Two characteristics of the best crypto agent are security and convenience. Normally, this would entail investigating your options and making a realistic assessment. You are not required to follow the trend for this purpose, although the majority's pulse can be a useful input on occasion. Consider accessing resources that will help you become more acquainted with the network. Is investing in cryptocurrency worth taking a loan? Loans can be alluring, but they are not always reasonable. Depending on your financial situation, you may want to consider taking out a loan to get started with your cryptocurrency investment. However, if the situation appears to be unfavorable, seeking alternative sources may keep you free of potential conflicts of interest. Each investor has their own set of expectations and priorities. Thus, the decision would be influenced by a number of factors. While the potential gains may be substantial, this does not guarantee the desired results. To succeed, you must navigate the system. As a financial expert recently stated, the rational approach to cryptocurrency investment is to avoid borrowing money. The reason for this is that all asset classes are volatile and do not guarantee stable returns, but loans have interest rates that must be paid on a consistent schedule. Thus, what is the proper approach to cryptocurrency investment? In general, long-term investments are more rational in the context of digital assets such as cryptocurrency. Financial experts are constantly highlighting cryptocurrency's potential to grow and outperform other investment options due to their ability to store value. However, caution must be exercised by beginning with small transactions and gradually increasing their value in response to the results. Similarly, it is critical to maintain a healthy investment portfolio. This can be accomplished by diversifying your investments or allocating your capital to growth-oriented investments. Research is an effective tool for coping with the crypto market's volatility. Conclusion. While investing in cryptocurrency is a high-risk endeavor, this does not mean you are helpless. You can manage them effectively by following the suggested rules and exploring additional resources. Risks are frequently what separate a profitable investment from a losing one. It's simply a matter of perception and how you handle potential setbacks that could prove decisive in your investment. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.